Rise News. Now, Nigeria's central bank deputy governor in charge of economic policy, Mohammed Abdullahi, says the financial regulator is sharing ideas and views on financial architecture reforms, as well as policy measures of the Tinubu administration with other central top bank officials at the AFDB annual meetings holding in Kenya. He said this while speaking to Rise business correspondent Bosun Omofaye earlier today in Nairobi. Let's take a look.
There, Mr. Deputy Governor, there's been a governors' meeting here at the EFDB annual meetings. Could you give us a preview of some of the key issues that you and the rest of your colleagues across Africa are talking about and why they are very important?
Thank you very much. We're here in Nairobi, Kenya, and a lot of important discussions are happening as part of the Africa Development Bank meetings here in Nairobi with the Committee of Governors, like you've mentioned. This morning we took a very detailed presentation from the President of the bank, Mr. Adesina, who's also Nigerian, about the successes of the bank so far, the challenges of the global economy and how they affect Africa and countries like Nigeria, the outlook for the future, both for the region and for the Africa Development Bank, and what support is required to actually push through development and growth across the various countries in Africa.
Interesting. Are there specific positions that you would like Nigeria to take in terms of the global financial architecture, how some of these key discussions could impact Nigeria in moving forward, being part of the Pan-African move to see Africa getting a fair share of the global financial marketplace and the systems?
Well, definitely. I mean, we're here together with the Central Bank and the Ministry of Finance of Nigeria, sitting side by side, really listening and contributing to some of these important issues around reshaping the global financial architecture, and particularly Africa's role and opportunity in this. As you know, many of the countries across Africa are facing similar issues: high persistent inflation, FX instability from a strong dollar, global challenges from the Russia-Ukraine war, the aftermaths of COVID. So a lot of the issues are quite similar. And what we're discussing here is coordinated action, both from the fiscal side and from the monetary, in terms of how to reposition Africa's development over the next couple of years. The bank, the Africa Development Bank, as a major part of that architecture, as one of our premier multilateral development banks, is leading this conversation, and all member states are actually contributing. From the part of Nigeria, we've come to discuss some of the very courageous reforms that have happened over the last 1 year, but also to learn from other member states around what challenges they're going through and how we can also imbibe some of those lessons that they have learned in their development journey. And I can tell you that it's already been quite useful. We're also discussing key business opportunities with both the private sector and other multilateral banks as well. And we're hoping on return to Nigeria that we'll be hoping really to ensure that we improve the flow of foreign direct investment, foreign portfolio investment, remittance flows, and all these things that are required to stabilize the economy in the short, medium to long term. There's also a deep conversation around how to ensure de-risking for private sector, how to ensure that some of the perceived risks, because a lot of it is not actually crystallized risk, it's perceived risks, can be mitigated so that more investment can flow into the continent and into Nigeria, particularly for us. So these are some of the deep conversations that are happening, a lot of side events that are also taking various parts of the economy and deconstructing it. In fact, there was one this morning with other central banks, I think Kenya, Mauritius and all, and if you listen to the conversation, you would assume they're talking about the challenges that we are facing today in Nigeria, with high persistent inflation, with FX volatility, and some of the strategies that countries are using to mitigate these risks. So these are the conversations that are happening, and we're really looking forward to a fruitful couple of days here.
Are there, to sum it up, are there specific discussions that the Central Bank of Nigeria would like to have with the AFDB in terms of the support that this DFI is providing Nigeria as the biggest and the largest economy on the African continent?
Well, there are conversations that are being led by fiscal already regarding some support for the Nigerian economy, for both private sector and the public sector. Those are conversations that are ongoing, and we're hoping that will conclude within the next couple of weeks and months. For the central bank in particular, there's a lot of conversation around how to link other central banks and share lessons learned and ensure that, as we're here with a number of investment banks, we're here with a number of portfolio investors, we're here with a number of huge companies that are investing in Africa. So it's also an opportunity for us as the central bank to assure them of macroeconomic stability, to assure them of the reforms that have been taking place in Nigeria, to assure them that when you come in, you can go out. Our flows, FX flows have significantly improved in the country. We are reaching stability. Our market is still in price discovery mode, but we will get there soon. So we are talking about these critical things, but also most importantly, we're listening. We're listening to investors, we're listening to development partners, we're listening to ensure that when we get back home, we can try as much as possible to correct some of the things that we don't see being so insular in the inside, and also some of the lessons that are being learned from other central banks across Africa and across the world.